how credit cards actually make money, and how you can benefit from them. Have you ever wondered how credit card companies make billions each year? It's not just interest. There's a whole hidden system at work. Today, we're breaking down how they make money, how you get trapped, and how to flip the game in your favor. How credit cards actually make money. 1. They get money through interest charges. When you carry a balance, even just a little, the interest starts stacking fast. With average interest rates around 20% or higher in 2025, credit cards are one of the most profitable forms of lending. One missed payment and suddenly, that £100 pair of shoes could cost you £120 or more. 2. They get money through merchant fees. Every time you tap or swipe your card, the store pays a small fee to your card issuer, often between 1% to 3%. If a store makes $10,000 in sales, the card company might take $300 right off the top. Multiply that by millions of transactions per day. That's a massive income stream. 3. They get money through annual fees. Premium cards charge anywhere from $30 to $600 a year just for the privilege of owning them. They promise rewards, airport lounges, and perks, but many users don't earn enough benefits to justify the cost. 4. They get money through late fees and penalties. Late by just one day? That's a $12.25 charge, sometimes even more. These fees brought in billions last year alone. And they can also trigger penalty APRs, where your interest rate skyrockets. 5. They get money through cash advance fees. Need cash fast? Using your credit card at an ATM might cost 3 to 5% upfront, and interest starts immediately with no grace period. It's one of the most expensive ways to access your own credit. The hidden tricks that keep you hooked. 6. They get money through psychological spending. Studies show we spend more when using cards than cash. You don't feel the loss the same way. Swiping is easy. There's no physical separation from your money. This leads to overspending without realizing it. 7. They get money through real-life spending. Trap scenario. Imagine this. You walk into a store planning to buy a phone case for $15. The shop assistant offers a special bundle. Phone case, screen protector, power bank. Only $49. You think, it's on my card, I'll pay later. You just spent 3 times more than planned. Now multiply that across 12 months. That's hundreds in impulse spending, all because the card felt like free money. 8. They get money through how they make you feel safe. Credit cards offer fraud protection, buyer protection, and even extended warranties. It gives you a false sense of security that encourages more spending. You trust the card, so you spend more often and with less hesitation. Data is the new gold mine. 9. They get money through your data equals their profit. Every transaction you make tells them who you are, what you buy, and when. They can use this to target you with offers, share data with partners, or tweak your credit limits. 10. They get money through credit limit manipulation trick. Ever wonder why your credit limit suddenly increases without asking? That's strategic. Higher limit means more psychological room to spend. Even if you don't use it, your brain feels like you can. It's like giving a kid a bigger jar of cookies. Temptation rises. How you can actually benefit. 1. You should use credit cards like a tool. If you pay off your balance in full every month, you never pay interest. You still earn points, cashback, and perks, all without losing money. It's like using their system without becoming a part of their profit machine. 2. Pick the right cards that work for you. Choose cards based on your lifestyle. If you travel, go for miles or airline rewards. If you shop, go for cashback. Look for cards with no annual fee, or make sure the benefits outweigh the cost. 3. Build a great credit score that helps you. Using credit cards responsibly builds your credit score, which can help you get better loan rates on cars, homes, or personal loans in the future. Just one card, used wisely, can unlock better financial opportunities long-term. Now let's take a case study example. Let's look at Emma. She has 3 cards. 1 cashback card for groceries, 1 airline card for holidays, 1 store card for big purchases. She never pays interest, pays in full, and earns $400 per year in cashback plus $500 in travel perks. Now compare that with Alex, who carries a $3,000 balance and pays $75 per month in interest. Same tools, very different results. So in conclusion, credit cards are one of the most profitable financial tools ever created. But with the right strategy, they can work for you, not against you. Understand the game, avoid the traps, and flip the system in your favor. Let the banks profit off others, not off you.